Hello, everybody. Welcome to Mr. Keith's Money Monday. It is 6/8/2026, and we're going to be doing our trades today. First one we'll be doing, this is in the Robinhood account. Remember, the goal of this account is to deposit $500 a week. So I started the month with 2,000 in there from money I saved from last month. Put it in the account. Took everything else out I had in the account. Trying to use the stock market and options to grow the account to 100,000. Reach this goal in 103 years. Understand the disclaimer. This is a journey of my account, and I share it with you for informational purposes only. I am not providing legal, accounting, or financial advice. Make sure you do your own research, and if you copy these trades, understand we could lose money in the trades. All right. So now, in the Robinhood account, remember last week we sold a cash secured put to buy IBRX if it dropped below $7, and last Friday it dropped below $7. See if I can pull up the chart here. So 1 week we were looking good all last week. It was just staying above $7 until Friday. And then it just dropped right below $7. So we were assigned the shares. We now own 100 shares, and we are now going to sell a covered call on these. So going to go into options. This is part of that wealth wheel strategy we talked about. You can check out the video last week and see what we have there. So what we did, we're going to sell a call that expires this Friday, 4 days from now, and we're going to sell. The question is, what do we want to sell? We could sell it exactly for what we bought it at. Remember, we bought it for $7. We could sell it for $7, and we can get 38 cents. We'd probably get about 40 cents. A little earlier, it was 45 cents, but I was trying to get this video together. So I'm just going to go right at $7. That's what we bought it at. So we can sell it exactly like that if it stays above $7. So I'm going to click in here, click that, 38. I think 35 is what they're going to fill us at. 35, yeah, 35. High likelihood to get filled there. We could put it at 40 and see if it gets filled if the stock goes back up. It kind of jumped up to 720 something. It's been coming back down. So I'm just going to put it at 75. Or at 35, sorry. So you are agreeing to sell the 100 shares of IBRX at $7. So we bought it at $7. Remember, we got paid $15 to do that. We're promising to sell it at $7, and we're going to get paid $35 minus the commissions there. So that would be $50 in 2 weeks if we get called out. If we don't get called out, we still make the $50. So I'm going to submit that one. And that got filled. All right. So done there. Now for the next trade we still got some money in our account we can work with. I'm going to type in, I'd like Carnival Cruise Lines. And I did some research, and I've fiddled with this before I came on here. So this is just the stock I chose. I'm not going through how I chose it, but just one of the stocks I follow. You can see, I pull up the last 3 months. You can see 34 is kind of like the lowest it's gotten the last 3 months. Every time it gets down to there, it jumps up. So we call that a support zone. Every time it drops down there, it will bounce back up. People come in and buy it. So what I'm going to do is I'm going to go in and sell a put. Now I don't have $2,400 in my account. So what I'm going to do is called a spread. So I'm going to go down and I'm going to do the $23 spread. Oh, I need to change the date. We're going to go out to July. 39 days, July 17th, 39 days. Now remember we said it doesn't drop below 24, it gets right about 24. So I'm going to go a little bit lower. I'm going to say 23. And I'm going to sell that one. But then I'm also going to buy the $20 one. And that will give me a $27 $27. What does it say? 26, somewhere right in here. What is it giving me? Total credit for the spread, 31 cents. So we're looking to make 31 bucks on this one. This one's out for a month, 39 days. So what we're doing is selling the $23 put, which makes us promise to buy it if it drops below 23. But we don't have 2,300 bucks in our account. So what we are doing is in buying insurance to say if it goes below 20 bucks, we can offload it through there, which means our risk, if you look here, would be $265. This is a 3-point spread. We are going to get paid 35 bucks. So 300 minus 35 is the 265. That is our total risk. So if by July 17th it has dropped all the way down to 19, 18 bucks, we know our max risk. If it drops all the way down to zero, our max risk is only 265 bucks. And for that, they're going to pay us $35. So those are the two trades we're going to do in here. Order and submit it. And that got filled. So there we go. We'll put that into the trade journal and go there. So those are the two trades that are in that one. Now what I'm going to do is shift over and go to the other account. This is our beginning account. So if you are new to this, this is basically selling some spreads. We did the wealth wheel on IBRX when we got assigned the shares, and now we're selling the covered call on it to generate income. So 35 bucks, and what do we get on the investing? Usually I do this on my phone, so I'm still learning how to do this on the laptop version. There we go. I think we got paid 35 bucks for that and 35 bucks for that. So we got paid 70 bucks today. All right. So not a bad day for a couple $1,000s in our account. All right. So that will do it for that account. Now, the other account, the goal in our main account is to use my account and use the stocks and the money I have in there to generate $500 a week cash flow by using options. Hopefully I'm able to use this money to buy more stocks and not have to spend it. So that's the goal of this account. This is just my regular brokerage account. Same disclaimer applies here. I usually use about 5 stocks a week to generate this 500 bucks. This week I did 4 stocks, but I did 2 trades on 1 stock. So I'm going to show that to you right now. Did it in my live account, and now we're going to do it in this paper trade account. This is simulated trading. So if you like to practice these trades, do it in a simulated trading, because you can't lose any money there. Can't make any money, but you can't lose any money. So it takes the fear out of doing this. So the first one I did was Oak, and in my trading account, in my real account, I do have 400 shares. So I went in here and I bought in the paper trading account. I came in here and bought some shares here. So what I did is I'm going to trade. I'm going to look for the July. All these trades I did for the July 17th, just like last week in the account. I'm going to pull up a single here. So this is a covered call, which is exactly what we did with IBRX if you did that trade. In here, I'm looking at July, and I'm looking at $95 strike price, and I got paid $140 in my account. Looks like I can get just about that in this account also. I'm going to go up here, analyze the trade, and take out the stock. And I'm going to put this out to the July 17th. So this is the gray area is the probability cone. If we look at the chart, you'll see the probability cone here where they think the stock could be trading by July. So they're saying it could be up to 98, could be down here at 77. I'm going at this 95 where it's hit 95 twice, and I'm thinking it's not going to get out there. Now, of course, with the war and oil and everything, it could shoot up there, and then I'll have to adjust it. But my trade I'm doing is I am selling, and I only want to do one. Doing one $95 call. That's saying I will sell it if it goes above $95 on or before July 17th. And getting paid $140 for that. I'm going to put that in $140. Confirm and send. You'll notice it doesn't take any buying effect. This is a covered call, so I already own the shares in my account. I'm just generating some money off the stock I already own. All right, so that one's in. And then also, all right, got filled right away. Also, I did a put credit spread, which is what we just did with Carnival Cruise. I did a 80-75, and I did 2 contracts. If this thing drops down below 80, I wouldn't mind owning some more shares of it. And my account, I got 50. I'll put 50 and see what gets filled for here. It'll probably get filled at 52. But I did 2 of those. So again, that is promising to buy it if it goes below 80, and the stock price right now is at 88. But I'm buying insurance in case we have some big market crash. If it goes below 75, I can offload it for 75. So if I analyze this trade, I take the, what is that one? Take that out. Just delete that one, don't need that in there. And I take the call out. You can see down here I have to have $1,000 buying power in my account. So you can see up here I have 32, almost 33,000 in my account I can play with here. So this one you can see here, again, the probability cone has it down. It could drop down there. I don't think it will, but we'll see. Again, I wouldn't mind owning this stock. But you can also see my max risk, $900, and max gain should be $100. So there you go. All right, confirm and send that in. All right, another one I did a trade on was Disney this week. The reason I'm kind of neutral in the market right now, don't think it's going to go too low, don't think it's going to go too high, is I'm going to pull up a chart here. Average monthly stock returns from 80 to 2018. Probably should look and see if there's an updated one. But you can see in June, pretty flat. It's just a pretty flat month. There's an old saying, sell in May and go away. So the saying was that the people on Wall Street would sell stocks in May, go on vacation for the summer, come back in September and pick up buying again. So that's kind of where it comes from. You can research that and look into that saying more if you want. But we're looking June pretty flat to July starts going up. So we're looking to either be flat, maybe a little down, maybe a little up in June. So I'm just thinking the market is just going to kind of be what it is. People are on vacation. Things just don't move as much. We'll see what happens. So that's why I'm pretty neutral in the market right now. Disney trade. So Disney, I'm going to do another put credit spread. Put credit spreads are my main thing I do in this account. Every once in a while, I do some different stuff, but put credit spreads, call credit spreads, and selling covered calls. It's kind of bread and butter of this account. So in the Disney, I did do 2 shares of this one. Let's go here. So I did 90. I need to get to Disney. Didn't change. DIS. Disney. All right. In July again. And I am doing these for July because earnings for most of these companies is going to be in August. So all these options should expire in July. And then we'll wait and see what happens with earnings in August on these stocks. And then we'll probably play some more trades after earnings. So I play this window in between the last earnings and the next earnings. So we're going right here. You can see Disney. Don't think it's going up above, 120. Don't think it's going below 90. Just kind of been sitting in this window. So what I'm doing, trading, going 90.85, right here. I did 2 contracts of that. So again, that's selling. That's promising to buy it if it drops below 90. Buying my own insurance in case something catastrophic happens and it goes below 85, I can get out. In my account, I got 45, so we'll just put it in for 45. Again, kind of gets repetitive here. You can see 90 bucks is what I'm going to make. I'm looking between, I want to, on my money, on the $1,000, I'm looking to make between, well, one contract would be 500 bucks. I'm looking to make between 5 and 10% on that money. So if I pull up the calculator and I get 500 bucks. 10%, obviously, hopefully you know that would be 50 bucks. But if we do for 5%, 25 bucks. So I'm looking to make 25 to 50 bucks per contract here that I'm making. So that's what I'm looking at. So the 40, 45, that's on the high end there. That's what I'm looking at. I'm going to do 2 contracts to get close to my 100 bucks that I want to make. But 90 bucks is pretty good. Confirm and send that in. All right, and then the last one, we got a couple more I did here. HD, Home Depot. People still gonna buy stuff, fix up their homes, even if they can't sell them. So trade there. Looking at the charts, we can see it went down to 92. It's been up 110 up here, went up to 116. So that's kind of the range I'm looking at. It's been coming down. And it's getting down here. So I'm just kind of watching it, seeing. The spread I did was 275, 270. Oh, man, I'm on the wrong thing here. How come it didn't go? HD. There we go. Okay, pulling up the chart. Okay, HD. 288 down here at the bottom. Down here, it did get down to 273. Kind of, if you look at this stuff, it's been down 270. Earnings out here in August. So I'm looking right here. This one I did 275, 270. So you can see I'm outside the probability cone. I'm below this last support level. So again, another put credit spread, vertical. I did 275, 270. I did 2 contracts on those. And I got filled in my account at 45. So we'll see if I can get a little higher right here. We'll put it in for 45. Confirm and send that. Then the last one I did is Barrick Gold. So I looked at silver. I looked at Amazon. Didn't like any of those. Gold price has been coming back down. I still think they're going to be high. I think the mining stocks will still make money. So I'm looking right here, and I'm looking at about 30. What I do? I did a 35.30. So that's a little closer. Yeah, it is closer. Didn't know I did it that close. 35 is right above that probability cone. So there's a chance we can get that, especially if gold comes down. I did a 35 and I did 30 and I did 2 contracts on those. $35, $30, and I got 56 in my account, but 52 is good enough. That gets us where we want to be. Let's analyze that trade. So this one is more in the probability cone, so there's a chance we could get this one. We'll see what happens between now and July 17th. We'll see. All right, got that one in there, 52 cents. Again, max risk, 900 bucks because they are paying us 100 bucks, and we're looking to make about 100 bucks. So I'm going to confirm and send that one in. Go back to monitor. All right, so we did 2 contracts there. That is $52. We'll just say it's 100 on that one, plus 90 on this one. Oops. Type 1,000. 100 plus 90 plus. I got Disney. I got 90 because I did 2 contracts there. Plus the Oak. I got $100 there and 140 there for the covered call. So that is 240. And assuming, let's see. Oh, the working one. Where did our B go? Our B, I guess it got filled. All right. So 1, 2, 3, 4, 5 equals $520. So there you have it. Trying to get $500 a week. 520 is what we brought in, minus some of the commissions. So another successful week. I will put these in the trade journal. I didn't show you the trade journal last week. I'll pull that up next week. So I'll put these in there. Make sure you journal your trades and write it on a piece of paper. Get a trading journal, something, so you can see how it works and how you do. Have a good day. Any questions, put them in the comments. Oh, remember, like, subscribe. Have a good day. Bye.